The next type of decision that companies are required to make is the discontinuation decision. And what we're looking at over here is the company might have a certain department or division that they're looking at shutting down. Or maybe they'll have a certain product and they're looking at discontinuing one of the products that they make. So that is a discontinuation decision. Let's look at an example. The Was Bank division has been struggling for the past 2 years due to intense market competition. The results of the division for the most recent financial year were as follows. So we can see they've got sales, direct material, depreciation, salaries and wages, and they're sitting with a loss of 35,000. And if the division is shut down, the entire workforce will be retrenched at a cost of 30,000 Rand. Okay, so we are looking at shutting down this division, and we have a retrenchment cost over there of 30,000 Rand. And we can see the division is currently making a loss. Now, guys, remember, again, direct material is a variable cost. My depreciation, if it's straight line depreciation, which I assume if the question is silent, is a fixed cost. And salaries and wages, be careful. They haven't told me that this is direct labor, so it's not a variable cost. If it's salaries and wages, it is a fixed cost. We need to determine whether the division should be shut down or not. Right. I'm going to come back to this discussion over here just now. Let's first look at our calculation, please, guys. Once again, you can see I have included both approaches. Please, let's just look at the total approach for now. And with the total approach, remember, we perform 2 calculations. We are going to work out what happens under each alternative. What happens if they continue and what happens if they discontinue. And then we compare the 2 calculations and we tell the company what they should do. So let's first look at what will happen if the company continues. So if they don't shut down the division, they continue with this division. If they continue, they'll obviously have sales of 200,000 Rand. They will incur material costs of 125,000. They will also have the depreciation cost of 25,000, and they will incur salaries and wages of 85,000. So if they continue, they make a loss of 35,000. And you guys can see that is exactly what I have in my continue calculation. Okay, very simple calculation. The only thing we need to now consider is if we discontinue. Please note, if they discontinue, they obviously won't have sales anymore. If you shut down the division, you won't have any sales, so there's no sales. You also won't incur any variable costs because if you shut down the division, you're not going to buy any direct material, so there's no variable costs. However, the same as the last example that we just looked at, please remember, you're still going to incur this depreciation cost. Regardless of what they do, they're still going to incur the depreciation cost. And remember, that is because depreciation relates to an asset that was purchased in the past. We can't change that. We already purchased the asset. We can't now say we're not going to purchase the asset. We already have it. So the depreciation is writing off that asset over its useful life. So regardless of what we do, we're still going to have that depreciation cost. However, with the salaries and wages, we were told that if they discontinue, all of their staff are going to be retrenched. So please note that even though the salaries and wages are fixed costs, when they shut down, they retrench all of those workers. So they will not incur that cost anymore. Okay, so please be careful. You need to think logically. In the last example that we looked at, we dealt with fixed overheads. But we included the fixed overheads under both alternatives because regardless of what the company did, they still incurred the fixed cost. We were not told anywhere in this question that they would avoid that fixed cost by buying the components instead of making the components. So we had to include the fixed cost in both calculations. However, in this example, we know that the fixed cost is going to be avoided because when they shut down the division, they are going to retrench all of their staff. So they will not incur that fixed cost. So the fixed cost is not taken into account. So guys, what's important to note over here, in the long term, you can see if they continue in the long term, they have a loss of 35,000. If they discontinue, they have a loss of 25,000. So you can see it's better for them to discontinue because the loss is smaller. So in the long term, they should discontinue because we have a smaller loss. Instead of a 35,000 Rand loss, they only have a 25,000 Rand loss. So rather discontinue. Just be careful, guys, that is in the long term. Because in this question, we were given retrenchment costs. We've got retrenchment costs of 30,000 Rand. But please note, we can't include that in our long-term calculation because this is a once-off cost. You're going to pay this 30,000 Rand once, you're going to retrench your employees, and then you will never incur the cost again. It's not a recurring cost. So it does not affect my long-term calculation. Because the retrenchment cost is just a once-off cost, so if we discontinue, we have a once-off cost of 30,000 Rand in order to retrench our employees. This only affects my short-term calculation. It does not affect my long-term calculation. So in the short term, guys, if we continue, we have a loss of 35,000. If we discontinue, we have a loss of 55,000 in the short term, because in the short term, I have to pay these retrenchment costs. So you can see in the short term, we're actually worse off by discontinuing, because in the short term, it's more expensive if we discontinue. So in the short term, if we discontinue, we incur extra costs because of the retrenchments. So in the short term, actually, it's going to be difficult to discontinue because in the short term, it costs the company more to discontinue than to continue. However, in the long term, we can see that it's better for them to discontinue because in the long term, the loss is larger if they continue than if they discontinue. So we always make decisions that are in the best interest for the company in the long term. So if we look at our conclusion, initially in the short term, the company will incur an extra 20,000 Rand if they close down the division. Where's that extra 20,000 Rand coming from? It's the difference between 35,000 and 55,000. We incur an extra 20,000 Rand. There's an extra loss of 20,000 Rand if we shut down. In the short term. However, in the long term, they will save 10,000 Rand per annum if the division is shut down. And where's the 10,000 Rand saving coming from? If we look at the total approach, it's the difference between the 35,000 and the 25,000. Because remember, with the total approach, we've got two calculations, not just one calculation. So we have to compare the differences between the two calculations. And we always do what's best for the company in the long term. So therefore, they should shut down. In the long term, they are better off by shutting down, so they should shut down. Incur the once-off retrenchment cost and shut the division down. It will result in a long-term saving. Okay, so that is the total approach. Let's look at the incremental approach. And remember, if you do the incremental approach, you're not going to have the total approach to look at because you're only going to perform one of the calculations. Either you do the total or the incremental approach. So this is a standalone approach. And with the incremental approach over here, I am assuming that the division is shut down. So we are going to go through each line item that we've been given over here and see what happens if we shut down. And remember, with the incremental approach, we only take into account relevant revenues and relevant costs. So first, the sales are going to be relevant because it differs between alternatives. It's a future cash flow and it differs between alternatives. If we continue, we get the sale amount. If we discontinue, we don't. It differs between alternatives, it's relevant. You can look at the general rule, it's avoidable. If we continue, we have the sale. If we discontinue, we don't have the sale. And if it's avoidable, it is relevant. So either way, if I apply the definition or the general rule, I know that my sales amount is relevant. So if I shut down, I'm going to lose out on sales of 200,000 Rand. That's why it's a negative amount. It's sales I'm losing out on if I shut down. Is the material cost relevant? Definitely. It's a future cash flow and it differs between alternatives. If I continue, I incur the cost. If I discontinue, I do not incur the cost. It is avoidable, so it is relevant. And that is going to be a saving if I shut down, because if I shut down, I will not incur that cost. The depreciation is not relevant because regardless of what I do, I still incur that depreciation cost. It is exactly the same for both alternatives. It's not avoidable, so it is not relevant. It's not a cash flow. And the last cost we had over there is the salaries and wages. That is a future cash flow, and it does differ between alternatives, so it is relevant. If we continue, we will keep the employees and we'll have to pay them. If we discontinue, we're going to retrench them. It differs between alternatives. It's avoidable if we want to look at the general rule. It's avoidable. If I continue, I incur the cost. If I discontinue, I do not incur the cost. And if it's avoidable, it's relevant. So if we shut down, we will have a saving of 85,000 Rand. So these are lost sales. It's a saving in my material cost. It is a saving in my salaries and wages cost. So we can see we get exactly the same answer as the total approach. In the long term, we can see we are better off by 10,000 Rand if we shut down the division. So in the long term, we should shut down because we will save 10,000 Rand per annum. We get to exactly the same conclusion as the total approach. However, in the short term, we need to pay these retrenchment costs. Is the retrenchment cost relevant? Yes. It is a future cash flow that differs between alternatives. If we do not shut down the division, we will not incur the cost. But if we do shut down the division, we will incur that cost. So it is relevant because it differs between alternatives. It's also avoidable. If I don't want to incur this cost, I just need to continue. Don't shut down the division, then you can avoid the cost. So because it's avoidable, because it differs between the alternatives, it's relevant. So we take it into account. And you can see the net effect is in the short term, if I shut down the division, I'm worse off by 20,000 Rand. However, in the long term, I save 10,000 Rand, and therefore the division should be shut down. So you can see, regardless of whether I use the total approach or the incremental approach, we come to exactly the same conclusion. Then I left out one thing over here that I just want to go back to. Please note, when we are making decisions over here, we are making decisions about the future. We are trying to decide what is going to be best for the company in the future. Should this division continue or should it be shut down? What is going to be the best thing for them in the future? Which means, guys, where possible, we should take all future information or the most recent information into account. So in this question over here, I gave you the information for the most recent financial year, and I didn't give you any other information. So in this question, we were forced to use the information from the most recent financial year. However, what they might do is they might tell you, this is the information for the most recent year, but this is what they expect to change in the future. They think in the future, sales will increase by 10%. Material costs will increase by 5%. Depreciation will stay the same. Salaries and wages will stay the same. If they give you extra information about how these costs are going to change in the future, then you must take that into account in your calculation. So then you don't use the most recent results in your calculation. Instead, you use the future estimates. So you don't include your sales at 200,000 Rand. You include your sales at the amount you expect the sales to be in the future. Okay, so in this example over here, we didn't have the information, so we could just use what we had. So if you don't have any information, you assume that the cost will remain the same in the future, exactly the same as we did in this question. But if you are told about any changes in costs or any changes also in revenues, not just costs, but also revenues, then the information must be taken into account in your calculation. So that deals with the discontinuation decision.